What's going on YouTube? It's Brendan from Market Makers. Guys, today we're going to do something a little bit different. We're going to go over how to set up your weekly chart so you can look at some forecasting. You can see how I'm basing my trend analysis. I think it'll help you a lot at home if you are learning some charting or just want to enhance your skill set a little bit, or just see how it is that I come to some of the predictions that I come to, okay? But real quick, let's do a market check. Obviously, Bitcoin gave us a down thrust here on the daily inside of our mini cough trading range. Why do I call it a mini cough? Some people are asking me that because we are in a larger Wyckoff accumulation structure. There's your base, there's your ceiling, and we're doing the same exact steps but on a smaller scale here, okay? And again, guys, one thing to cover with you that's extremely important: the volatility is max contracting right now, and because we are holding that higher low structure, which we're going to look at on the weekly, because we're holding a higher low structure, I anticipate this to be a move up, okay? And you want to see this. This is some nice breakout volume here. I'd like to see the relative volume really kick in by the time this candle closes. Give it that nice highlight, and because this will give you a bias to break to the upside. As you guys know, the key levels that we are tracking here, I don't want to beat this to death, I just want to show you the weekly. The 618 at 44K with the 233, and of course 48,266, our previous rejection point, 20% down move, okay? Now, the DXY, I'm going to show you that. The NASDAQ, I told you it was critically important for the NASDAQ to find its base, and indeed it did. It came down to the 0.5 fib and got a nice little bottoming action, trying to move up. The market is, okay, it's open here in the after hours. So what we're seeing here is the NASDAQ's trying to hold this bottom, okay? Again, Bitcoin and the NASDAQ are intricately tied. Tech is intricately tied to the crypto space. Very important to realize that. Same with the Russell, had the same action. I don't need to show you that. Oil sold off, gold sold off, silver sold off. They all found bottoms. So we'll see what happens. And of course, GDP numbers do come out this week, I think Thursday, preliminary GDP numbers. Very interesting to see how those GDP numbers come in. Are they going to be disappointing? Because if they are, we could have another rout in the markets, okay? Or are they going to be as expected, which is supposedly strong, coming off a very strong fourth quarter last year? I don't know. We'll see. We'll see how the market reacts. Also, Microsoft and Amazon are reporting Tuesday and Thursday. So be very interesting to see how the markets react. Let's look at the DXY really quickly. DXY, again, this is part of the reason this is a wet blanket on Bitcoin, okay? So your November timeframe where Bitcoin made its all-time high is here. The DXY has just gone parabolic since then, because even though it is fiat, and my fellow Americans understand this when I say this, it is backed by nothing and it's just a piece of paper, it is still, I guess, considered held in higher esteem than some other countries' currencies, and you have people cashing up, exiting the market. Lots of various reasons the dollar is rising, but it is still a safe haven. Maybe crypto can get there one day, because even with peak inflation, 8.5% CPI print, which translates to 16-20% real inflation, the DXY keeps rising, which is absolutely mental. There's just a lot of faith in the Fed, that the Fed can control inflation, which I do not believe they can. They're going to break something in the markets. Looking at the weekly really quickly, because we're going to go over this on a fresh weekly chart, okay? Well, let's go ahead and just jump into the fresh weekly chart. So here's your weekly chart. We're going to cover some fib concepts, and we're going to look at Wyckoff here, okay? So first thing let's go ahead and do Wyckoff. That'll be faster. So if we do Wyckoff, I've done this for you before, but guys, just keep in mind where your accumulation is, okay? Your accumulation started way before the bull run, and here's that March virus candle, okay? So there's your low. Now, when you look at this, you have your original accumulation, your reaccumulation, you have your distribution, strong hands selling to weak hands, you have your capitulation with a 50% plus drop in the market, bringing you from markdown into accumulation. You exit accumulation into reaccumulation. You're in markup at this stage, and then you go to a new distribution box, make a new all-time high, and then you have markdown. This is a failed accumulation range, which became what? Distribution again, and now you're holding this range, okay? And then we're going to go over this with Wyckoff, and then we're going to look at it with fibs as well. So a couple of things to note before we go to the current trend. this reaccumulation range, here's your buying climax candle. Here is your selling climax candle. This range has been used multiple times. Obviously, it was used here, but after that first capitulation with over a 50% sell-off, it was used in these months of May all the way out to July. And what month is coming up, guys? May up to July again, right? So you use this exact same range so closely, as a matter of fact, that you kiss the same area. You see that the 28,790, depending on the on whatever exchange you're on. This is 28,790 and this is 28,800, okay? So this is very, very close. You can see this range is where Bitcoin had a lot of strength for accumulation. One thing to note, as we do go ahead and move forward, let's go ahead and box this in over here. This is a higher range. You can see that you're in a new range here. So let's go ahead and box this in. So we have our selling climax candle, and we have our automatic reaction. And as you can see, this is our current trading range. Now, when you add some things here, such as the angle, let me go ahead and throw an angle on here, trend angle. As you guys know, in the daily time frame, we've been talking about the ascending triangle. Put that on a 20-degree angle. You can see the ascending triangle right here in Wyckoff as well. Again, this is a bullish accumulation pattern, combination of higher lows, law of three. You're getting your higher low structure, your valley, your peak, your higher low, your higher peak, and of course your third higher low. We need a third higher peak. To do that, we got to break above that 48,266. Okay, so that's where we are in Wyckoff, and you want to see that cup type pattern come up on top of this trading range. Same cup type pattern you did here. Okay, you come up, you get a buying climax candle, and you roll over for the cup type pattern. You accumulate, and then you get your move up to your new distribution box. And that's what we're looking for here. Now, let's talk about what targets we have, because Wyckoff gives us a roadmap of price movements. Wyckoff is essentially trading with the large operators, okay? Wyckoff doesn't give you price targets. It shows it's a trend direction roadmap, I guess you could say, because you can see the steps that price has to make to determine the direction that it's going to go. Now, if we use our fibs, go down to that March candle from 2020, go to your previous all-time high, go to your market low. A couple of things to note here, some good bits of information. You have the 618, which you did not get a weekly candle close above. Here it's 66,523. You can see how accurately this held. Remember, the 618 commonly retraced to fib, and of course capitulation after that. And then you can look and see the rebound here. You have 382 being being used as resistance as well. So you could say, well, would you just leave this fib here? Meaning that if price did get bullish, could you just use this as a target? 52, right? The 382 at 52. I mean, you could. I would move it forward, and let me show you why. So let's look at this. I like to look at the current wave structure as well. Market low, 28,790, all-time high, down to your swing low. Look at your 382 now. Remember, on the daily, we caught this almost to the dollar. And here at the 382, it is 48,289, right? When I predicted that market top, you have it here on the weekly, right here. 48,289 within 30 bucks on the weekly time frame. So this fib layout seems to be very accurate. And once again, guys, you throw down that trend angle, put that out there on about a 20, and you start looking at shapes. We were triangle trading in Forex, I guess, over 20 years ago, very popular, okay? A lot of pattern traders come from the Forex space. So this is an ascending triangle, once again, using Fibonacci as your ceiling here. And this, again, breaks to the upside 2 out of 3 times. And this is how you can help look at your targets, okay? And of course, you can get a base from here as well. Go to your all-time high with your trend-based fib, down to your swing low, to your current swing high. We'll go ahead and turn this one green for support, okay? Now you can see basically your Wyckoff box is essentially this 382 Fibonacci box. You see that down here at 34,462, up here at 48,289. And again, bullish accumulation, right? Bullish accumulation that breaks to the upside 66% of the time. So usually you don't get all the way to the apex. Usually you get somewhere in here towards the front where it starts to get narrow. We already have volatility compressing heavily on the daily time frame. You should start getting a move up soon. If we are going to move up, we shall see. Remember, macroeconomics, news cycles, lots of things play in. The equities market health. wealth. But this, in a nutshell, is a very bullish pattern. As you can see, it is a 3 rising valleys pattern. It is an ascending triangle pattern on the weekly time frame. Most people on YouTube are totally missing this because it's so easy to focus on this. Now, looking at targets and being realistic, again, I told you this next few months, I predict max pain. It doesn't mean markets won't go up. Markets move in price waves, okay? So I think realistic targets, if you can flip 44 on the daily, remember, you got to get past 44. If you can flip 44 and you can flip 48, you complete the 3 rising valleys pattern. I'm looking at 53K and the 618 at 57.7. Those two are my two most realistic targets given the macro events of the Fed raising rates, of people pulling money out of the marketplace, of tech selling off hardcore. I gave you that example on Netflix. These are two realistic targets. Now you have to get there because you can capitulate at that 44K level, obviously, on the daily time frame and just fall out of the triangle, which brings me to when is this pattern not valid? When you sweep this second valley, okay? When you come down, if you come down, what's this candle at here? 34,322. So basically, if you lose the 382 right here at 34,462, you've broken this pattern. So if you break the pattern, then you've invalidated this bullish accumulation pattern. And actually, that's the top. This is harder to see on the weekly. Let's look at this here, where this is our second valley here. So 37,580. And the low here is 37,161. So 37,161 is actually, because the pattern count would be valley, peak, valley, peak, right? So we can't lose this second valley, which is 37,161. Okay, back on track here. 37,161 we cannot lose, which puts you somewhere up here. So you could draw a trend line if you wanted to, but that's kind of your line in the sand for breaking this bullish pattern. Doesn't mean you still won't go up, but you have this bullish accumulation pattern, okay? And obviously you want to hold this, and you've been using this triangle now as support. So, all right, continuing my thought process. This is a very bullish pattern, and if we do get that price ascension and we can flip 44K and 48K, those are your targets, guys. And, you know, I think this is something, again, with the cycle that's coming up with the Fed, I think it's going to be difficult to even get to these targets. I've told you I think this is very difficult. However, I do anticipate when markets are oversold, just like the NASDAQ, you do get a rally. Remember, I give you that market analogy of a rubber band. You pull a rubber band back, you're oversold, it snaps back with equal force. Okay, physics, natural law applies in the markets too. So if the NASDAQ does rally, it sold off, what, 14%? NASDAQ rallies 7%. As you guys know, crypto space moves exponentially. You could see Bitcoin come up, and you could see it flip that 48.2, maybe come to the 0.5 at 53K. That's your third spiky top at that point. And of course, then you could have capitulation and start your way down, as we have here at our A wave, to the 23K area. Okay, so you could pump up, get to that 52, 53K. That's your third top. That is your lower high after your all-time high, and then your descension, because price moves in waves. So it's definitely a possibility. I wanted to show you guys this to see how I kind of like look at things, how my thought process works, utilizing Fibonacci, utilizing patterns, and of course, marrying in the market news, which has to do with the Fed and the overall marketplace. All right, guys, if you like this video, go ahead and smash the like button, hit the subscribe button. Definitely check us out, marketmakers.trade. All the pertinent links in the video description. BITGET, where we trade these markets, you can use our link. You get the bonuses, and you get invited to all the private tournaments that they host through our link as well. All right, guys, another video coming tomorrow. Enjoy your evening, everybody. Talk soon.